Hi, this is Leigh Gant at Georgia United Credit Union. Thanks for joining me today for Teens and Finance. In today's session, we'll be providing some practical tips to help young people understand money and managing finances. We'll discuss the benefits of managing your money at any age and in any amount, the role of the family in teaching about finances, how savings is a gift, and the importance of protecting your money, basic banking and how your money grows, and saving for a goal. We'll even discuss establishing credit, the impact of credit score, and the importance of protecting yourself from identity theft. But before we dive in, let's talk a bit about the difference between a credit union and a bank. For those of you who don't know, Georgia United is a not-for-profit financial cooperative. This means that we are owned by our members, and we keep the best interests of our members as our top priority. Because we work for our members and not stockholders, we help you to keep more of your money by charging lower rates of interest on loans and higher rates of savings interest. And with that being said, let's dive into our topic. Why is it important to manage money? You are always in control of your money, no matter how much or how little you have. Your money equals your decisions. Financial stress can take a toll on your health, your relationships, and your family. Think about the advantages of saving money. What do you see yourself accomplishing with this money that you've saved? What type of goals do you have for the future? Do you want a degree, a car, a home? It's money that will help you reach these goals. So here's the golden rule. Your parents have the gold, so they make the rules. This may be true, but the reason why I bring this up is to demonstrate that your parents are your primary teachers of money management. Society says it's rude to discuss money. For example, you don't ask someone how much money they make or how much money they have. However, in the normal course of life, your family will experience teachable moments that you don't want to miss. When the car needs new tires, or when your air conditioning breaks, or you have an illness. Talk about it as a family. What choices do you have when you need money? If you don't learn anything else today, I want you to learn this. Spending is money that you're giving away. Savings is a gift you give to yourself. Hold on to your money and you'll never regret it. And you know how the more you do something, the easier it becomes? If you make savings a habit, you'll be off to a bright future because you'll be saving your money regularly, and then it won't seem so difficult. Hold on to your money. It matters. Once it's gone, it's gone. Here's an illustration of how spending just a little money can really sneak up on you. Say you like Starbucks and you want to get those $5 cups of coffee 6 days a week for 36 weeks just during the school year. If you indulge in a $5 cup of coffee 6 days a week for 36 weeks, at the end of the school year, you will have spent a whopping $1,080. Banking basics. What makes a good account? What is a bank account? And why do you need a bank account? Well, your bank account is probably the biggest and most important financial decision that you'll make in your life. Your bank account is something that you will look at or use every day on a daily basis. Do you know what to look for in a bank account? There's some things you should consider when you're shopping for a bank account, such as, are there any fees to have the account? Is your money protected from financial downturns? Can your money grow with your bank account? Will the bank pay you interest on your money? And what are your savings options? Where's the bank located? Do they have debit cards and mobile banking? With the question of should you pay to use your own money, the answer is no. You should not lose money. You should make money from your money. So watch out for hidden fees or charges. This is why it's so important to shop for a bank account. Make sure you ask about minimum balance requirements. Are there any monthly maintenance fees, or do they charge you for using your debit card too many or too few times? And where should you put your money? You do have options. We mentioned checking accounts. They come with check writing privileges and a debit card. There's savings accounts where you can put your money aside and it grows. And if you even have more money, you might choose a money market account that pays extra earnings or a certificate of deposit. That's a savings product that has a predetermined maturity date. And because you're going to leave it in there till that date, we give you more interest on that money. How will you find money to put into your account? Do you get an allowance? Are you able to do some work and earn the money? Or perhaps your parents are going to help you by contributing, especially if they know that you're saving for a goal. So let's talk a little bit about interest. Interest has an interesting power. It's called the power of compounding. So, say you have 5 gold coins and you keep them under your pillow for a year. At the end of that year, you're going to have 5 gold coins. However, if you put them in the bank where they can earn interest, say the first time they get a coin worth of interest, now you've added an extra coin. So you're getting interest on your interest. As you can see, every time you pay interest, the interest earns interest and you compound the interest. So you can see that it's much better to invest your money in the bank than to leave it under your pillow. You may have heard of SMART goals. SMART goals are specific, measurable, attainable, relevant, and time-bound. Here's a specific illustration of a SMART goal. Specifically, I want to buy my mom a scarf for her birthday. Measurable, the price is $15 plus tax. Attainable, I can save my allowance in order to buy the scarf. Relevant or realistic, I can work to earn $5 per week. And timely, her birthday is in 1 month, so I should have all I need. Let's say you put $1,000 of your summer earnings into a Roth IRA for each of the 4 years from the age of 15 to 18. If you stop and you never put in another penny and you let the money grow until you're 65, if you're earning 7% a year at the age of 65, you'll have $107,000. But if you wait until the age of 25 and then put away $1,000 for each of the 4 years until age 28, you can see that the account will only be worth $50,000 at age 65. Bottom line is, if you start at age 15 rather than at 25, you can double your savings come retirement account with no extra work. Writing a check is like making a financial contract. So let's look at some of the elements of a check. What you're saying is, on this date, I will pay this person this amount of money, and then I'm going to sign my signature to it as a pledge. There's also a memo line where you can write what it is for, and then you'll notice there's 2 lines, one with a dollar sign where you write numerically, and then the other one with the word dollars where you write out each of the words for the amount of the particular check. Did you know if the written amount is different than the numerical amount, it's the written amount that matters. That's what determines what the check is worth. So let's talk a little bit about credit. Someday you're going to want to have credit established. Why? So you can pay for large purchases over time. You have to start small, which is why I recommend a credit card. The easiest way to start is to be an authorized user on your parents' credit card. You're not responsible for the payment, but as it's being used and paid off, you'll be earning credit. Once you're over 18 and have a job, you could open a secured credit card. That's where you use your own cash as collateral for a credit card. And remember, always pay your bills on time. Many people that you pay your bills to report to the credit bureau, so you want to pay them on time. Here's what makes up a credit score. Now, you've heard of good credit, right? Your credit score is a snapshot of your payment histories. This is what makes up a credit score. You have control over the 2 largest percentage areas: credit history, which is paying on time, and credit capacity, meaning Don't max out all of your available credit. The better your credit, the higher your credit score. The higher your credit score, the better loan rates you can get. Here's an example of how your credit score can affect the rate you get on a car loan. Someone with excellent credit might get a loan at 4% interest, while someone with poor credit might be charged 14%. The lower interest rate in this scenario saves the person with good credit almost $6,000. And finally, no discussion about finances would be complete without mentioning the need to protect yourself, your money, and your identity from fraud. Identity theft is when someone has enough information to assume your identity. Once they have it, they can use it to take out loans in your name, steal your money, produce a driver's license, and ruin your life all around. Let's start with something as simple as passwords. Passwords, we all need them, but we have to be smart about it. Don't use the same one for everything, and don't use one that could be easily guessed. For instance, a bad guy might have access to your name and birthday, but they could never guess your pet's name. And mix it up. For instance, you could use the word baseball, but use a 3 for the E. And be careful what you carry. Do not keep passwords or social security cards in your wallet, your glove compartment, or in any other area that has access to people. Be careful who you let into your home and what you have out. Don't provide easy access to your personal life. And emails. I'm sure you all know that opening a fraudulent email attachment can infect your computer, but it can also be one of the ways the bad guys get access to your private information, which they can use to take your money. So be vigilant and beware of anyone claiming to be contacting you via email or phone, claiming to be a merchant, your bank, Google, or Amazon. Again, don't use links provided in an email. Go directly to that particular website to be sure the request is legitimate. Protect your account information regarding your banking, particularly your debit card, and shut it down right away if it's lost or if you have suspicious activity on your account. Answer Visa fraud calls or call back quickly unless you want them to shut down your card. So wrapping it up, let's review some of the items we've discussed to make sure that your financial future is healthy, wealthy, and wise. Quit looking at your money as though it represents your next burger or Starbucks and see the bigger picture of your financial future. Protect your money by shopping around. Be vigilant when you get credit and vigilant in protecting your identity. And check out additional resources at gucu.org. Georgia United Credit Union has youth programs such as our Money Mammals. Our Money Mammals program is for children that are birth to 11 years old. It features fun games and apps that teach you about money. You can earn electronic badges for completing games and challenges. There's coloring pages, videos, and more. Check that out at gucu.org/savings/youth programs. And for students who are ages 12 to 17, the program allows for a checking account with a debit card as well as a savings account. It has no monthly service fee, and it gives you convenient online and mobile banking access. We also have a scholarship program for high school seniors. You must be a member to apply. In addition, on our website under youth programs, there's a link to learning content that is robust and relatable with videos and resources that will help you become money smart and money empowered as you start your financial journey. I hope we've given you some things to think about today. Don't be afraid to implement some of the ideas in this presentation or to ask your parents what has worked or not worked for them in managing their finances. If you have a question about Georgia United, credit unions in general, or anything else that we covered today, you can reach out to me, stop by a Georgia United branch, or contact our Member Care Center at 770-476-6400. Thanks for joining me for Teens and Finance. Goodbye.